Well, the economy slowed during the September quarter, but nowhere near as much as expected, auguring well for the future. That's our main story today. Also this morning, Joe Biden's top advisor in the region says China will re-engage with Australia. Two of the country's highest profile politicians to quit at the next election, and Donald Trump talks about his comeback. It's Thursday, the 2nd of December, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat to Felicity Emmett, senior economist at ANZ, about yesterday's economic growth figures. And that really is the main story today, Sean. The Australian economy contracted by 1.9% during the September quarter, which was a better outcome than most economists had forecast.
Yes, Michael, it was bad but not awful. The 1.9% decline was the third largest quarterly contraction on record, following the 6.8% fall in the June quarter last year and a 2% fall back in June 1972. Not surprisingly, household consumption fell almost 5% through the quarter. Now that's the second largest drop ever. By the end of September, the economy was slightly smaller than it was in December 2019 before the virus. The household savings rate jumped to almost 20%. That's what happens when economies slow. But on an annualised basis, the actual economy grew at a 4% pace. That's all the numbers, but of course, it really did reflect lockdowns. The biggest falls came in New South Wales, the ACT and Victoria. Things are on the up though. Speaking after the release of the data from the Bureau of Statistics, Federal Treasurer Josh Frydenberg said the result wasn't a surprise and pointed to recent strong increases in construction, non-mining investments and exports. Also, households have rising levels of disposable income. Mr. Frydenberg said 350,000 new jobs had been created since the start of September. He was certainly setting an upbeat tone.
Yeah, and much of the data since then has been stronger, hasn't it?
It has. The ABS figures showed that there was a big jolt to the economy during the September quarter, but really there should be a big bounce back during the current December quarter. We're already seeing that in retail. Yesterday, speaking at a property conference, the boss of Scentre Group, Peter Allen, Scentre owns all the Westfield outlets, said his shopping centres had done well since the lockdowns, with 98% of stores open. Foot traffic levels were back to 2019 levels, Mr. Allen said. Of course, the new Omicron variant is the big unknown for the economy. If that spreads quickly and is more severe than first thought, then all bets are off. Having said that, it's remarkable how well people managed to change habits during this year's lockdowns. If there was another lockdown, and you'd have to say it's probably less likely, it would be less severe in economic terms than this year's shutdown, which was much less severe than last year's lockdown.
All right, so how did markets perform yesterday?
Well, all things considered, the S&P ASX 200 did pretty well. It finished down 0.3%, closing at 7,236 points. Remember, the market opened yesterday on the news out of the United States that not only was the Omicron variant of COVID-19 spooking financial investors, but US Federal Reserve Chair Jerome Powell now considered inflation more than transitory. That was a fair bit to handle. The big banks outperformed, as did CSL and Wesfarmers. The iron ore miners, BHP, Fortescue and Rio Tinto, all benefited from higher iron ore prices. But market darling James Hardie was among the worst performers of the big caps. Of course, it operates in the US, and the comments from the Fed chair would have hurt it. Woolworths and Coles Group both did poorly, as did Afterpay and Transurban.
Speaking of the US, what's happened in overseas markets overnight?
Wall Street rebounded somewhat after the big sell-off on Tuesday night. The S&P 500 was up nearly 1% in early afternoon trading. European markets were much stronger though, with the Stoxx Europe 600 closing 1.7% higher. The German bourse led the way. It was up 2.7%. The Aussie dollar is a bit weaker this morning. It's trading at 71.2 US cents. Brent crude has steadied but remains less than $70 a barrel, and gold is trading around $1,780 an ounce.
We'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around this morning. President Joe Biden's top advisor in the region says the AUKUS agreement between the US, the UK and Australia will eventually convince Beijing to re-engage with Canberra.
Yes, White House coordinator for the Indo-Pacific, Kurt Campbell, said the AUKUS agreement would lead to a higher degree of strategic intimacy between the three countries And in fact, it was the most important agreement of its time. The pact, of course, emerged between the three nations when Australia opted to buy US-made nuclear submarines, dumping French-made subs. Dr. Campbell said other allies had asked to participate in AUKUS, and it would be an important agreement in fighting other challenges, including cybercrime. He said Australia was not alone facing off China, and President Biden had raised the Australia-China trade war with President Xi Jinping when they spoke last month. He expects China to eventually re-engage with Australia because it's in their interest to do so.
Now, I mentioned this one at the top of the show, Sean, but Health Minister Greg Hunt and former Attorney General Christian Porter will quit federal politics at the next election.
Yes, apart from the Prime Minister, I think Greg Hunt has become the highest profile MP during the COVID crisis. He's been in Parliament for 20 years, representing the seat of Flinders in Victoria, and he's been Health Minister since 2017. He is expected to officially announce today that he's leaving. Mr. Hunt has generally been applauded for his efforts as Health Minister during the pandemic, though I must say his oversight of aged care, particularly after the revelations of the Royal Commission into the sector, didn't really win him many plaudits. Mr. Porter, who stood down from Cabinet after refusing to identify the secret donors who funded his legal challenge against the ABC in a defamation action earlier in the year, told his Facebook followers yesterday he would quit. He said he had no regrets. Mr. Porter's been a fairly controversial figure for the coalition following allegations of rape against him many, many years ago. Those allegations Mr. Porter denies. The two will join fellow Victorian MP Tony Smith on the sidelines. Mr. Smith resigned as Speaker last week. There will be others, though, Michael, I dare say. That's my prediction.
Yeah, I suspect you might be right. There could be a few others joining them in the next few months. Now, Sean, a slightly worrying case of the Omicron variant of COVID has been identified. And I just say worrying because the person spent a reasonable amount of time in the community in Sydney.
Yes, but New South Wales Health Minister Brad Hazzard yesterday ruled out lockdowns as a way to curb the spread of the variant. The state recorded 251 new cases of COVID yesterday. It now has a 92.5% vaccination rate for people over the age of 16. Victoria recorded 1,179 new cases yesterday and 6 deaths. The ACT recorded just 4 new cases. That's good news. The ACT now has a near 98% full vaccination rate for people over the age of 12. Remarkable. Across the country, the vaccination rate is now 87.2% for adults aged 16 and over, and around 39 million doses have been administered. And Michael, finishing the COVID news on a positive note, Australians can now fly to Fiji and return quarantine-free. Thus far, the Omicron strand hasn't changed the rules around travel between the two countries. That's good news.
Yeah, it certainly is. Now, Qantas is launching its second frequent flyer points auction. You really do have to give it to Qantas, don't you, for its creativity?
Yes, you do. There are millions of frequent flyer points out there, and it's a way of getting rid of some of them. They are, of course, a liability for the airline because theoretically it has to cash them in. Now, yesterday, Qantas launched its second frequent flyer points auction. You go online and use your points to bid for unique and exclusive experiences. So this time around, you can bid for a luxury trip to London, a private jet flight to Hamilton Island with 20 close friends. Now, bidding on that one, Michael, starts at about 3.5 million Qantas points. A Whistler luxury ski package or a 3-night stay in Sydney over New Year's Eve. There's a few others as well. You can also bid for a full-sized bar cart, or a pre-loved, is how they put it, a pre-loved business seat. Now, I'm not sure I'd spend my points that way, or maybe I don't have enough to even be part of the auction. Interesting, though.
Yeah, I've just looked it up, Sean. The Whistler luxury ski package starts at just 500,000 Qantas points. It's still out of my reach, but you can always dream, can't you?
I bet it goes for a lot more than 500,000 points.
I suspect that might be the case. And just staying with airlines, Sean, The Australian is reporting that passenger revenues at Virgin last financial year fell by more than 70%.
Yes, Virgin ended up losing $77 million last financial year after cutting costs, including staff redundancies. Virgin is now owned by American private equity group Bain Capital. Jane Herdlicker, the boss of Virgin, spoke to Fear and Greed earlier this week on Tuesday. That chat is well worth a listen. One thing she talks about is the fact that it's easier running the airline under private ownership as opposed to being listed on the ASX. Okay, Sean, what's making headlines in today's news media? Well, the Financial Review held its annual property conference yesterday, and the view among the sector leaders is that the economy is bouncing back strongly, but government needs to expedite migration to relieve labour shortages and support the recovery. Reuters is reporting that the European Union-wide rollout of Pfizer and BioNTech's COVID-19 vaccine version for 5 to 11-year-old children will begin on the 13th of December. It comes as a special session of the World Health Organization agreed to create a new international agreement to prevent and deal with future pandemics. And finally, Michael, the Financial Times is reporting that the Omicron coronavirus variant threatens to intensify imbalances that are slowing growth and raising costs. That's according to the OECD. The group lifted its global inflation outlook and said it was important that vaccine rollouts continue.
Running through some of the other stories around today, Susan Lloyd-Hurwitz, Chief Executive of Mirvac, says saving a deposit, not higher interest rates, is a bigger hurdle for people looking to break into the housing market. The more important issue is housing affordability, not rates, she says.
I think she's probably right, given how low rates are.
I suspect that might be the case, yeah.
ANZ yesterday said it was subject to a class action by credit card holders. The action alleges ANZ credit card contracts contravened the ASIC Act. There's been an uptick in class actions recently, Michael, and I tell you what, the banks will not be spared on that one.
And there's always plenty of action coming from Crown Resorts, Sean, and here is this week's update. Crown Resorts officially appointed Dr. Ziggy Swatowski as chairman, replacing Jane Halton. He's going to be very busy. Crown is the subject of a $12.50 a share bid from private equity group Blackstone. Crown's share price closed yesterday down 0.8% at $10.94, which is clearly well below the offer price.
People obviously don't expect James Packer, who owns 37% of it, to sell, because $10.94 compared to the $12.50 bid price, that's a huge gap and very, very unusual. Finally, Victoria's Legislative Council sat for more than 24 hours, finishing just before lunch yesterday, debating the Andrews government's controversial pandemic legislation. The upper house had to work its way through 83 proposed amendments. The legislation will now be sent back to the lower house.
You know who I really feel sorry for in all of that, Sean? The support staff in Parliament.
Ah, yes. I was going to say
had to stay there the whole time and make sure that everyone was well looked after.
Just the day after we got the federal report into workplace culture. There you go.
Yeah, indeed. Now, what's the key overseas news this morning, Sean?
Well, Chinese factories, which are all important to the global economy and, of course, Australia's big miners, contracted ever so slightly last month. It comes as rumours swirl that Beijing will soon allow greater production in coming months. We'll watch that closely. Donald Trump is back in the news, saying that ambitious Republicans are begging to be chosen as his running mate in 2024. The former president has yet to say officially that he'll run again, though he's certainly making all the right noises. Of course, consistency isn't one of Mr. Trump's greatest attributes. The Times is reporting that one condition of being a running mate for Donald Trump is you must back Mr. Trump's false claims that the 2020 election was rigged. Should be interesting. Microsoft shareholders have backed a protest vote calling on the tech giant to reveal more about its handling of sexual harassment claims in wake of the revelation that co-founder Bill Gates had a relationship with an employee. 78% voted against management, and Microsoft said it would ensure greater transparency in the future, but stopped short of saying it would reveal details of individual allegations. And finally, Michael, the Economist Intelligence Unit has released its latest rankings of the most expensive places to live. Israel's Tel Aviv has taken the top spot, followed by Paris and Singapore, then Zurich and Hong Kong. Exchange rates and inflation impacted this year's list pretty heavily. Rome has gone from 32nd most expensive to 48th. The cheapest major city to live in is Damascus in Syria.
Okay, now up next, Sean, is the Daily Interview, and today you're speaking to Felicity Emmett, Senior Economist at ANZ.
Yes, we talked about the economic growth figures out yesterday, her take on what they meant and what growth will look like this quarter and into next year and what that means for house prices and interest rates.
Yeah, she had some really interesting comments on house prices, so it's a really interesting chat worth having a listen to. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 2nd of December 2021. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.